This is Nightly Business Report with Tyler Matheson and Sue Herrera. Funded in part by...
All it takes is a spark. One idea to take flight. The courage to seek the unknown. To innovate, disrupt, to move us all forward. To explore a different perspective. At NASDAQ, we connect the world. Its ideas, its capital, its businesses, the people that drive global economies. The future isn't tomorrow, it's right now. All it takes is a spark. NASDAQ.
Investor exuberance. The major indexes are at or near all-time highs, but are stock valuations flashing a warning sign?
Disney drops an unexpected decline in revenue, has investors taking a close look now at what's working and what's not at the House of the Mouse.
Deep divide. Why Nevada's love-hate relationship with its biggest landowner could get a lot more interesting under the Trump administration. Those stories and more tonight on Nightly Business Report for Tuesday, February 7th.
Good evening, everyone, and welcome. The NASDAQ cranked out a record close. The other two major indexes, they're within reach, and many investors say they are optimistic that stocks could head even higher if earnings growth is sustained and if the White House pushes through tax cuts and other stimulus. Today, the Dow Jones Industrial Average rose 37 points to 20,090. The NASDAQ was up 10 to a record finish, and the S&P 500 eked out a gain as well.
The rise in stocks has one influential hedge fund manager concerned. The New York Times reports that Baupost Seth Klarman has described the market as, quote, having perilously high valuations, end quote. In a letter to investors, Mr. Klarman wrote that exuberant investors have focused on the potential benefits of stimulative tax cuts, while mostly ignoring the risks from America First protectionism and the erection of new trade barriers. So is the market overvalued, and what should you do? Matt Maley joins us. He's equity strategist at Miller Tabak. Matt, welcome back. Nice to have you here.
Thanks for having me, Sue.
I guess that is the question. Do you feel that equity prices and valuations basically are too elevated?
Well, they certainly are getting high. I mean, you look at the PE ratio on a trailing basis, it's 21 times earnings. That's a concern. And, of course, the CAPE ratio, which is like a 10-year average of price earnings, is up at 27, up near all-time highs. On a trailing basis, it's lower, down near 17. But the big problem is we don't know what exactly those forward earnings are going to look like, because we're not really sure exactly how much of Trump's proposals will get passed, when they'll get passed, and, of course, most importantly, when they'll get implemented. Have
investors, excuse me, underestimated the risk from some of the policies like protectionism, like a border adjustable tax, et cetera?
I think they have. I mean, they're just pricing in for perfection. The problem is that, when you have things like the bank stocks, they had a 30% rally just over 2 months, but actually they had already been rallying since the middle of the summer, up over 50%. And they're pricing in all this big deregulation. I understand that, and I think Dodd-Frank will be pulled back to a certain degree. But, it's not, let's face it, deregulating the banking system is not the most populist thing in the world. And there's this woman, this senator, Elizabeth Warren, who's got a good bully pulpit to argue from. She's been pretty quiet lately. I think we'll hear more out of her, and she might be successful pushing back on some of that bank regulation. So I think people are pricing in just a little too much of what Trump's going to be able to succeed in getting passed.
And if that is the case, and if there are some roadblocks, either from Congress or regulations or what have you, I would assume that we might get a little bit more market volatility. As a long-term average investor, not the Wall Street guy, but the long-term average investor, how do you handle that?
Well, I think the best thing to do is, like any, pullbacks in the market, even corrections, are not only in their normal, but they're healthy. So just let them ride them out. But you might want to sit back and hold back from putting in new money into the market just now, and put it in if the market comes in. Everybody wants to talk. We'll wait for the market to pull back, and they're going to buy on weakness. So therefore, it won't happen. I think it still can happen because of the valuations that Mr. Klarman talked about, and that will bring some opportunities, especially in the tech area and the energy area, if we get some pullbacks in those names.
All right. On that note, Matt, thank you so much. Matt Maley with Miller Tabak.
Dow component Disney could set the tone for trading tomorrow. Late today, the company said its quarterly revenue was weighed down by ESPN And its studio business. Disney did, however, report better than expected earnings of $1.55 a share, 6 cents better than estimates. Revenue, though, down 3% from a year ago to roughly $14 billion, and that's what investors focused on as shares fell initially in after-hours trading. Julia Boorstin breaks down the pluses and minuses in Disney's report.
The real drag on both Disney's earnings and revenue is Consumer Products division, showing declines on tough comparisons to the year-ago quarter when a slew of new Star Wars products boosted results. With all eyes on ESPN, considered a bellwether for the health of the TV bundle, it dragged on Disney's Cable Networks division, thanks to lower advertising revenue and a decline in subscribers. But firing on all cylinders, the Parks and Resorts division, showing growth both in the U.S. and abroad, thanks to its new Shanghai park. From Disney headquarters in Burbank, California, I'm Julia Boorstin.
President Trump's temporary travel ban is in a federal appeals court tonight. The judges will decide whether it can be reinstated or if the ban should remain on hold. Each side will have 30 minutes to make its case. And as we've been reporting, the technology industry has been paying particularly close attention.
In a nutshell, President Trump's executive order suspends travel from 7 mostly Muslim countries the administration deems terror incubators. And the decree has spawned widespread protests. But the president continues to hold his ground.
I mean, we have to have security in our country.
Opponents are essentially making 3 types of arguments to the appeals court. First, that the temporary ban is unlawful. Second, it represents bad policy. And third, that it threatens the nation's economy. Just south of the hearing in San Francisco lies Silicon Valley, capital of the U.S. tech industry, where the president's executive order is raising tensions. In a court brief filed Sunday, about 100 major tech companies, including Google, Apple, Microsoft, Facebook, Intel, Netflix, Uber, and Tesla, came out against the travel restrictions. They say the order harms the competitiveness of U.S. companies and that the rules will make it far more difficult and expensive for U.S. companies to hire some of the world's best talent. The Silicon Valley Leadership Group, an industry trade organization, says 58% of the engineers and other high-skilled employees there were born outside of the United States. But the number directly affected by the executive order on travel is admittedly a small fraction of that percentage. For instance, Microsoft, based to the north in Washington state, has about 120,000 employees, 71,000 in the United States. The company says it knows of 76 employees who are citizens of the countries targeted by President Trump's order. At Alphabet, Google's parent company, thousands walked out in protest. The company has said more than 100 of its 72,000 global workers are directly affected by the order. It's not just tech that's been impacted. The healthcare industry wasn't part of Sunday's court brief, but 16% of its more than 14 million workers were foreign-born in 2015, including more than half the medical scientists. Think biotech. It's unknown precisely how many healthcare workers would be hit by the travel restrictions. One thing is certain, though, Silicon Valley and lots of tech companies are up in arms over the presidential ruling.
And today, more than 160 biotech executives signed a letter to a science journal criticizing the travel restrictions.
So let's turn now to our 2 guests who have opposing views on the topic. Joining us is Alex Nowrasteh, who's the immigration policy analyst at the Cato Institute, who is against the travel restrictions, and John Miano, fellow at the Center for Immigration Studies, and he supports President Trump's move. Gentlemen, thank you very much for joining us. Alex, let me start with you. Why do you oppose this particular move by the Trump administration?
Well, for one thing, the move will not increase national security in the United States one iota. These 7 countries that are on the ban list haven't sent a single terrorist who has killed an American on U.S. soil in a terrorist attack ever. So it's unclear what the purpose of this is if it's not to increase national security. And secondly, the economic impacts of this order and future orders that will likely come if this one is upheld will be pretty bad for American business, especially a lot of competitive businesses that hire a lot of Americans expand and grow in the United States. It creates uncertainty for them and their employees and investors who want to build and expand firms in the United States. If their employees go overseas and then all of a sudden a president in the future puts a travel ban or a restriction that prevents them from coming back, just like we saw a couple weekends ago, and that's going to cause a lot of problem for business, and that's going to restrict the ability of firms to grow in the United States and hire Americans.
I can see, John, where this is an inconvenience for a lot of companies and for maybe hundreds of workers employed in the United States from these 7 countries. But where is the concern about national security in this? Why? I understand that the companies are aggrieved,
right?
But shouldn't they also be concerned about threats?
Well, that's what, that's the big thing that President Trump is putting forward, is that, America's a nation. It's not just an office park where to put a business up. And there's great concern over terrorism. And, we're sitting there saying, well, no terrorists have come from these countries yet. I mean, the objective is to stop it from coming. And the intelligence people are looking at, where are the most likely places for terrorists to come to the United States now. And these 7 countries are pretty likely candidates. 6 of them have completely dysfunctional governments, and Iran, the 7th, is a funder and a sponsor of terrorism.
So Alex, what about that? There are those in the country who feel as John does and have made that point. There are others who are saying, though, that if you keep this travel ban in place, then perhaps you expand it to other countries. It's a slippery slope, in other words.
Well, in the executive order, Trump explicitly wrote that he allows for more countries to be added on this list in the future for virtually any reason, and he could extend the ban on these countries going forward. And again, it's important to ask, they have made the argument, the administration, several times that there is a national security threat from these places, that this is sort of an imminent terror threat. That's why they rolled it out without conferring with many of the agencies or without members of Congress or the Senate, without them checking the order. But they can't point to any of those threats. They can't point to a terrorist who has killed successfully an American on U.S. soil from many of these countries. And so if they are actually concerned about national security and wanting to restrict immigration for those reasons, then there's lots of other countries they could have looked at that are a much better argument than these 7.
John, this is a 90-day suspension of visas for people from these 7 countries to look at the procedures under which people come in. Do you feel that, as Alex sort of alluded to, that what really is the company's concern here is that this is the leading edge, a stalking horse for more draconian, more restrictive travel policies that could go well beyond this inconvenience for this 90-day, admittedly it could be extended, for this 90-day span, and that could go to such things as the H-1B visa program, under which many thousands of workers come into this country every year?
I think you've actually hit the nail on the head right there with it. That right now you see the business lobbying and organizing over this particular issue that really doesn't affect them much. They're posturing because they know that President Trump is going to put in place regulatory actions and probably executive actions that will directly affect the business, and they're trying to organize here to try to minimize or head them off.
So, Alex, what about that? The H-1B visa program is what most of Silicon Valley and other areas of tech are concerned with. How much clout do you think they will have with the administration, given the amount of money they contribute to the economy, the number of people that they employ?
Well, Trump doesn't seem to care very much about economic reality. He ran in the rest of his platform on a wiser policy of wanting to deregulate energy, finance, and other types of portions of the economy. But when it comes to immigration, when it comes to trade, he wants to put in place more barriers that make it more difficult for American businesses to grow and to make basically Washington, D.C. the boss to determine which firms get to hire their employees, where they get to come from, what skills they need to have, and what wages they need to come from. If there's one thing that we should have learned over the last couple hundred years of economic history, is that when governments make these types of decisions for companies, for firms, for economies, and for Americans, it's just not going to turn out very well. And it's just, it couldn't be clearer that this is diametrically opposed to the rest of the conservative agenda.
All right. On that note, Alex, thank you very much. Alice Nowrasteh with the Cato Institute. John, thank you as well. John Miano at the Center for Immigration Studies.
And still ahead, the long and winding road why GM's record earnings are not enough for investors. Sears struggles are intensifying. The cost of insuring the retailer's bonds hit new highs, and its stock continues to tumble. Today, shares off another 13% to yet another all-time low. Last month, Sears' debt was downgraded by Fitch and Moody's following the retailer's lackluster holiday sales and mounting losses.
General Motors reported record earnings and better than expected revenue for the fourth quarter, but that wasn't enough to impress investors. Shares of the automaker were lower today, in part because of Wall Street's concerns about the potential impact of a border tax and how it could hurt the auto industry. Phil LeBeau reports.
These are strange days for GM CEO Mary Barra. For the second straight year, her company delivered record profits, fueled in part by strong sales in China and in the U.S., where the automaker is cashing in on heavy demand for highly profitable pickups and SUVs. So why is GM's stock continuing to struggle, even as the automaker forecasts even greater profits for 2017? One reason is President Trump, who Barra has met with at the White House. He's threatening to slap a border tax on vehicles made in Mexico and sold in the U.S. Not only does GM import more vehicles from plants in Mexico than any other automaker, a good chunk of them are those highly profitable trucks. So investors are worried GM may have to raise prices on pickups or pay a tax that cuts into profits, or perhaps pay hundreds of millions of dollars to move production to the U.S. Barra says GM is talking with the president and waiting to see what he ultimately does with a possible border tax.
There's a lot of moving pieces right now. We want to, and that's why we're at the table and also working at all levels of the administration to make sure we're providing the input.
While GM lobbies the Trump administration on tax and trade issues, the company does not see profits slowing down, especially here in the United States, where the average vehicle GM sold last year topped $35,000, more than $4,000 above the industry average. Phil LeBeau, Nightly Business Report, Chicago.
Heavy discounting hurts results at Michael Kors, and that's where we begin tonight's market focus. The handbag and accessories maker said a drop in retail foot traffic also contributed to the company's lower than expected revenue and same-store sales miss. The company's profit fell, but it was still enough to beat expectations by a big penny. Michael Kors also gave downbeat guidance for the current quarter, citing ongoing weakness in its North American market, and shares fell nearly 11% to $36.82. Cardinal Health missed revenue expectations as the drug distributor said results were negatively impacted by lower generic drug prices. The company beat profit forecasts, but cut its 2017 outlook for the second time. Shares finished up 2% at $77.76.
The health insurer Centene said an increase in membership in its Medicaid business helped profit top estimates. The company also posted forecast-beating revenue and reaffirmed its guidance for the year. Centene's shares were up 5% to $67 even. Emerson Electric beat profit estimates in its latest quarter as that company benefited from higher sales in China of its refrigeration and HVAC products. The company posted lower overall revenue, but said it was raising its earnings and sales guidance for the full year. Shares of Emerson Electric rose almost 4.5% to $62.54.
The trade deficit narrowed in December from the prior month. For 2016, though, it exceeded $500 billion, the highest level in 4 years. Exports last year fell faster than imports, in part because of the strong dollar. That gap is what President Trump wants to narrow as one of the ways to promote economic growth.
What is allowed in at our seaports? With cargo shipments, one of the biggest challenges is identifying what's not allowed in, like counterfeit goods, which can total hundreds of billions of dollars a year. Andrea Day talked to federal investigators on the front lines.
It's volumes of containers that we have to weed down and identify what gives us the most risk and prevent that from coming into the country.
At least 3,000 shipping containers arrive here every day, and that's just the Port of New York, Newark.
One container could have upwards of 2,000 boxes.
Cargo, he says, that could be loaded with counterfeit goods, drugs, or weapons. Is it even possible to check everything that comes in here on a daily basis?
It's impossible, because if we did that, it would stop our economy.
So agents work to identify threats long before the vessels even get close to the United States. Chief Al D'Onofrio, U.S. Customs and Border Protection.
That manifesting process gets looked at and reviewed. We have intelligence that comes in.
Containers that are flagged are brought to the secure examination site. Where are most of these products coming from? What countries?
Most of them are coming out of China.
That growing problem, according to federal investigators, counterfeiting.
It's a huge business. It's a multi-billion-dollar business. It's $600 to $700 billion estimated every year.
Assistant Special Agent Jason Molina, Homeland Security, New York.
The proceeds, the billions of dollars that are made from these items can go to fund terrorist organizations, can go to fund other criminal elements throughout the world.
And take a look at this. The shipment just stopped in its tracks.
This is all suspect of being counterfeit merchandise, specifically counterfeit perfume.
And sure enough, what looks like Chanel, Versace, and other high-end fragrances.
The labeling is telling me it's made in France, but yet it's coming from China. Clear indication that this is going to be counterfeit merchandise. Putting it in your hand and feeling it, you know you're dealing with something that's more of a toy than a high-end product.
All the boxes set to go out to small stores or sold online and potentially dangerous.
The counterfeiters have no standards. We've seen mercury, we've seen lead, we've seen arsenic.
It can be very tough to pick out the real from the fake, especially if you can't open the packaging. Now, his advice, buy directly from major retailers. And if the price seems too good to be true, that's a big red flag. For Nightly Business Report, I'm Andrea Day.
Coming up, a 21st century land grab?
I'm Scott Cohn in Red Rock Canyon, Nevada. Who is the biggest landowner in the United States? It's someone you know well. We'll tell you who it is and how that might change under President Trump. Coming up on Nightly Business Report.
The Trump administration has given final approval for the Dakota Access Pipeline. The Army Corps of Engineers granted the final easement needed to finish the nearly $4 billion controversial project. Construction had been delayed after protests from Native Americans and environmental activists. President Trump signed an executive order that revived the pipeline's completion.
Missouri is now the 28th right-to-work state. The governor signed a bill yesterday that allows workers to avoid paying dues at union workplaces. Businesses have lobbied for such laws, saying that they make states more competitive and help attract employers. Last month, Kentucky enacted a similar law.
Who is the largest landowner in the United States? The answer, the United States. You, the taxpayer. The federal government owns hundreds of millions of acres, most of them in the West, and the debate over those lands goes back decades. And now there's a new sheriff in town, name of Trump, and he's shaking things up. Scott Cohn reports from the state with the most at stake, Nevada.
This is the Red Rock Canyon National Conservation Area, 200,000 breathtaking acres, and you own it all. In fact, the American taxpayer, the federal government, owns nearly 85% of the land area in Nevada, more than any other state.
The House will be in order.
Congress has already begun dismantling Obama-era restrictions on the use of federal lands with the blessing of the White House. That hits home for people like Mike Reese, worried about a delicate balance.
Our best state of affairs right now, as bad as it is leaving the status quo.
Nevada has long had a love-hate relationship with its primary landlord. In 2014, tensions over grazing rights boiled over on the federal ranch land leased by Cliven Bundy, not far from here. The armed standoff lasted for weeks. The criminal trial against Bundy and his followers begins this month. Out here in the West, opinions about what to do with all of this public land are about as varied as the terrain and the interests involved, environmentalists, ranchers, companies. But with the Trump administration, some see an opening, a way to shake things up once and for all. Nevada Congressman Mark Amodei wants to transfer millions of acres from the feds to the state.
We think locals are in a better position to make those decisions regarding land use, resource, grow, not grow, than, with all due respect, the federal government 2,500 miles away.
Opponents worry the state can't afford the upkeep.
Can one single state that's got less than 3 million people in it really foot the bill for that? That's a high price to pay to have our own independence.
For their part, the president and his nominee for Interior Secretary say they're against the idea.
I am absolutely against transfer or sale of public land.
But in Nevada and throughout the West, they're bracing for change. For Nightly Business Report, I'm Scott Cohn in Red Rock Canyon, Nevada.
And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
Thanks from me as well. I'm Tyler Matheson. Have a great evening, everybody, and we'll see you tomorrow.
Nightly Business Report has been funded in part by...
All it takes is a spark. One idea to take flight. The courage to seek the unknown. To innovate, disrupt, to move us all forward, to explore a different perspective. At NASDAQ, we connect the world, its ideas, its capital, its businesses, the people that drive global economies. The future isn't tomorrow, it's right now. All it takes is a spark. NASDAQ.